Good morning, everyone. Welcome to the first BVRLA L&D Quick Wins webinar, which today focuses on salary sacrifice. My name's Tess. I'm the Learning and Development Coordinator here at the BVRLA. Thanks so much for joining us. We do have an action-packed 45 minutes ahead of us, and we do have a really large number of people registered for the event today. So let's just give everyone a little bit of time to get online with us. If we want to move to the next slide, let's just have a quick look at competition law. So as with all of our webinars, I do need to remind you about competition law, which you can see explained on the slide here. We do want some questions this morning, so please use the Q&A tab on the right-hand side to do so. But importantly, please don't ask any questions concerning pricing, strategy, or suppliers. I'll leave this slide up here just for a couple more moments, just while everyone else joins us, and so you can have a look to understand what we can and can't discuss this morning. There will be opportunities to ask questions, like I said, using that Q&A tab on the right-hand side of your screen. I'd now like to welcome Mark Powell, Head of Learning and Development here at the BVRLA, to tell you a little bit more about this morning. Hi, Mark.
Hello, thank you, Tess. Hello, my name is Mark Powell. I'm the Head of Learning and Development here at the BVRLA. It's absolutely fantastic to have so many of you here online for our first ever BVRLA Learning and Development Quick Wins webinar. That's easy for me to say. And the attendance today has been phenomenal, which tells us two things: that salary sacrifice is a key topic with so much going on in the space right now, and the quick wins format is one that we'll certainly follow up with later in the year. First and foremost, before I walk you through the agenda, I would like to introduce you to our trainer, Jon Burdekin. And since joining us in 2021, Jon has trained 862 delegates across 90 courses on the adoption of electric vehicles into company fleets and salary sacrifice. And obviously he's a subject matter expert on both of those subjects. And during today, we will be running a poll. So please feel free to click onto the poll tab on the right-hand side, and please vote, because we'd love to know where you are with your salary sacrifice journey, what scheme do you have in place or not. So in terms of today's agenda, Jon will cover off why is salary sacrifice popular, what is a typical audience for salary sacrifice, what to consider if someone leaves, what does a good salary sacrifice scheme look like, and what could go wrong. So this will be followed up, as we've mentioned earlier, with a Q&A session. So please use the questions tab, because we really want to answer as many of your questions as possible. But be rest assured, if we can't answer your questions live today on the session, we will follow up with every single question with an answer. Then we'll cover off the course agenda before revealing your special BVRLA Learning and Development gift for attending today. But that's enough from me. So Jon, if you can come to the stage, please. We'd love you to tell us why salary sacrifice is so popular.
Thanks, Mark, and good morning, everybody. Good question. Why is salary sacrifice so popular? It seems to be the hot topic at the moment. I guess to explore why it's suddenly become so, it's not a new thing, but to explore why it's become so popular, it's probably worth understanding how it works in a nutshell. The full course goes into a lot more detail about this, but just in a nutshell, this is kind of what happens in a salary sacrifice scheme. An employee enters into a change in their terms and conditions of employment, and they agree to reduce their salary. And when someone reduces their salary, they will, of course, pay less income tax and less national insurance. In return for that reduction in salary, in this use case, they will be given a company car in every way, shape and form. It's not a personal lease. It's a lease between the funder, the provider, and the corporate entity. And in a company car scheme, you will pay a tax called benefit in kind, or company car tax. So this marriage of established tax principles, if you're saving income tax and NI on the reduced salary, but you're paying benefit in kind on the alternative, which is a company car, then if the benefit in kind you pay is less than the tax that you save on your reduced salary, in a nutshell, that shows you the attractiveness of salary sacrifice. And of course, if an employee is paying less NI, it stands to reason the employer is also paying less NI, less employer's national insurance. Now we can get to your question, Mark, which is why is it becoming so popular? Well, if we're clear about those tax principles, that benefit in kind advantage, the benefit in kind on electric cars has been very, very attractive since 2019. It was reduced from 16% of the list price down to 0 in that tax year. And it's now currently running at 2% of the list price, and then your marginal rate of tax on that, whether you're a 20% or a 40% taxpayer. So why has it become so popular? Well, what we're effectively doing here is we're offering out that benefit of attractive company car tax rates, which has historically been the privilege of the company car driver. We're now effectively opening that benefit out to potentially all employees, which we're going to touch on a little bit in a minute. But for me, why has it become so attractive for the employees? It's because it can unlock such a dramatic tax efficiency. It's not a new method of funding. It's not some funky new way of financing a vehicle. It is just a more efficient blend of established tax principles. Nothing new about income tax, national insurance, and benefit in kind. We're just playing them in a different way to unlock a tax efficiency. But we're offering that to all employees, potentially with a couple of caveats. So we're offering this out. It's a corporate solution, but if you like, it's a corporate solution that could be aimed at a retail population within an employee base. So I would suggest that is why salary sacrifice has suddenly become so popular for the employees. For the employers, we start to look at the benefits for them as well. And I've already mentioned the potential to save on employers' national insurance. But why are employers suddenly becoming so interested in salary sacrifice? Well, if an employer has an appetite to give enhanced employee benefits to their workforce, here is a way of providing significant cost savings to their employees in a scheme that isn't really going to cost them anything to run, and done properly is going to be incredibly admin light as well. It's not zero admin, but it's admin light. So it's an enhanced employee benefit package at significantly reduced costs, if any costs, with the opportunity to save money for the employer as well. I suppose the other reasons why an employer would be interested in a scheme like this and why it's become popular for them is if they have an appetite to reduce their carbon footprint, call it environmental social governance, if you like, because if an employer can put more of their employees into electric cars, then they are going to have a positive contribution to their net carbon footprint. And specifically, in the employees' commute to work. It doesn't have to be business mileage, but when an employee drives to work, that commuting mileage counts towards the employer's carbon footprint in what is called their scope 3 emissions on measuring the carbon footprint. So the more you can get people into electric cars, the more you're going to have that great contribution to your carbon footprint. You may also, as an employer, be interested in, for instance, reducing your grey fleet risk. If you've got people out there driving on business in cars that they've provided themselves, the risks of checking whether it's properly insured, licenses checked, etc. Well, if the car has been provided from a corporate solution, then you are significantly enhancing your grey fleet proposition and reducing the risk there as well. So there's a few reasons why it's suddenly become so popular. It's effectively been driven by the attractive tax rates of electric vehicles and to a lesser extent plug-in hybrid electric vehicles. And again, the course goes into so much more detail about each of those component parts, about income tax and national insurance and salary sacrifice and benefit in kind, the flow of money, who pays who and when, because that's often misunderstood as well. It also looks at what a salary sacrifice scheme isn't as well, so we can be very, very clear about it. Once we've now understood why it's becoming so popular, then it's probably worth looking at who the typical audience would be for a salary sacrifice scheme. Again, I come across people who are potentially aiming their salary sacrifice schemes at the wrong audience or the less ideal audience. if I suggest that a typical employer may have 3 cohorts of employees, they may have a company car company car eligible base, they may have some cash takers, and then they'll have other employees that aren't company car or cash eligible. So out of those 3, where would you typically aim your salary sacrifice scheme? Well, there's an argument to aim it at all 3. Certainly, you would be offering it to all employees who aren't car eligible, because there's the employee benefit aspect of salary sacrifice. Mindful of the fact, of course, that you could never take an employee's salary below national minimum wage. Again, covered in some detail in the course, but just as a snapshot for today, it's the one showstopper for a salary sacrifice scheme. You just can't take an employee's salary below national minimum wage. So there needs to be some rigor in that and some processes to make sure that isn't the case. So employees, yes. Cash takers, absolutely. Because if you are a funder, leasing company, leasing broker, whoever, then the cash taker is potentially a lost customer to you. They've gone away with their cash, and they've gone and done something on their own with that money. And it may not be the most tax efficient approach for someone to take a cash allowance on which they will be taxed as salary, and then take that money off and go and do a private deal on the internet on a personal lease on which they'll pay VAT as well. It may be far more efficient for them to come back into the company space and enter into a salary sacrifice scheme with some or all of their allowance, and play a much more tax efficient game, as we've described. So I'd say cash takers certainly are in the mix for this as well. Company car drivers is an interesting space. If you're a company car driver and you're driving an electric car and you want to replace that company car scheme with a salary sacrifice scheme, what you're broadly doing is you're taking away a company car eligibility, replacing it with a cash allowance, sacrificing some or all of that allowance back, and putting them back into what is effectively a company car on which they pay company car tax. So with some nuances around national insurance, you're broadly putting someone back where they started from. So you could put a salary sacrifice scheme in place of a company car scheme, but far more common, it's offered as an employee benefit to anyone not taking a company car. And of course, the company car driver could take an additional car on the salary sacrifice scheme for their partner or their child or whatever. So the essence of a salary sacrifice scheme is broadly to increase the size of the cake that you can go after as a funder or a broker. Not to replace what you've already got. There's a risk potentially, if you're replacing company car with salary sacrifice, that you might actually cannibalize your own customer, because the salary sacrifice scheme will be optional and you're giving somebody the opportunity to leave you. If you're giving them a cash allowance instead of the company car, they may well go and spend that on a used car, on a car dealership. So it's not right, it's not wrong on a company car space, but I would ask people to just be a little bit mindful whether you're shooting yourself in the foot. But I have seen, and I have worked on schemes myself in previous employers where a salary sacrifice scheme has replaced a company car scheme. And where I've seen that, it is broadly for reasons of reducing administration rather than running 2 schemes, a company car scheme and a salary sacrifice scheme. Tends to be a consideration for the much larger fleets. If you've got, I don't know, 500, 1,000, 2,000 company cars, suddenly putting an administration burden on top of that is a consideration. So who's the typical audience? Mindful of national minimum wage, as I said, it's effectively all employees. And instead, if you're a provider, company car provider, lease company, car dealership, leasing broker, whatever you may be, instead of approaching a prospect and asking how many company cars have you got, because that's been your typical target, you're now approaching them saying how many employees have you got. So you can actually offer a scheme, an inclusive scheme to all employees, not just to the company car population. Brings us on to the next question in the agenda, which is, it's a question that if you're talking about salary sacrifice to your customers, your corporate customers, I guarantee you'll spend about 80% of your time answering this one question, which is what happens when somebody leaves? Remember, it's a corporate scheme. So if somebody leaves, in most cases, the employee can just hand the keys back to the company. I say fleet manager, but a lot of companies won't have a fleet manager, person responsible for the fleet, let's say. And that's a burden. It's an admin burden, potentially a financial burden to the employer. So the employer will be nervous of this. And as a provider, you will need to have some reassurance. And I guarantee you're going to get asked this, so why not bring it up before you get asked it? But you will need to have a solution in place to do that. Now, the course covers all various options in really great detail. Now, when we talk about someone leaving, that could be somebody resigning, retiring, being made redundant, death in service, leaving through ill health, mental or physical, could be dismissed. So there may be some subtle nuances between each and any of those where you may look to approach them. But I mentioned right at the start that the employer will make some significant national insurance savings, and they could use that as a provision for the occasional early termination that may come their way. They may just choose, of course, to reallocate a car to another employee optionally. But as these are company cars, then that can be done. It's the same as reallocating a company car. Some of the larger providers out there offer forms of early termination protection, added into the amount for the salary sacrifice reduction. So there are a number of ways that you can approach that. It's the elephant in the room, if you like, on a salary sacrifice scheme, that any decent scheme out there will need to have a provision for it. And there's no right or wrong answer here. Whether you use savings in national insurance, whether you use the ability to reallocate, whether you use some form of early termination protection or insurance, careful of the FCA considerations on that. There's no right or wrong answer, but what will need to be there is you'll need to have your answer to that question, because it is going to come your way. In every single case that you discuss, your customer will be nervous of that and will be expecting you to be able to answer it and give them comfort on that. The comfort you provide is up to you. But you will need to provide some form of comfort with that. So if we move on to the next slide, let's have a look at personal opinion. What I think a good salary sacrifice scheme needs to include. And the reason I'm touching on this is I am aware of some providers out there who are, once they realize this is just a company car, it's business contract hire, they're saying, well, I can do that. We've done that for years. So they're sending their customer a contract hire quote and a link on Google, I kid you not, a link on Google on how to do salary sacrifice. That to me is not a robust salary sacrifice scheme. And the fact that you've shown interest in coming onto this webinar suggests that you would be coming better on looking for a better solution onto that. So there's a couple of points on the slide here and a couple that are not on the slide. I guess the first one that isn't on the slide here is I would expect a really good salary sacrifice scheme to have some kind of pricing portal that the employees can go away and play with, so they can put in, I'm looking for a Nissan Ariya, I'm looking for a Tesla Model 3 or Model Y or a Kia EV6, and for the portal to give them back not a monthly rental, not the breakdown costs, but actually how much will be deducted from my gross salary and how much will be deducted from my net salary, so they can see the real savings of the scheme. Again, the course works through some real detailed examples of this, but I would expect a good scheme to have a portal to calculate gross and net deductions. You can see on the slide here, your customer is going to expect you to provide the scheme documents, and by scheme documents we mean some help and support for the payroll department. How much will I deduct from this person's salary and when? Payroll departments really like to be told exactly what to do. So some kind of payroll guidance there, not dissimilar to P46 reporting. The agreement between the employee and the employer, where they agree to reduce their salary, I would expect the provider to offer that paperwork as well. And your customer and their employees are going to have a lot of questions. There may be questions about how does salary sacrifice work. Will it affect my pension? How does it affect my mortgage? All of those questions that are going to come up. But there may also be some wider electric vehicle related questions, because if your scheme is out there and predominantly focusing on electric vehicles and plug-in hybrid electric vehicles, and your audience is nervous about electric vehicles, whether that's range anxiety, charging infrastructure, battery won't last, they catch fire, grid won't cope, all of those myths and questions, then you probably have a bit of pre-work to do to educate the audience and help them get comfortable. So scheme documents would be an important part on that. Probably also some scheme marketing collateral as well. So it's not just about trying to win a salary sacrifice scheme and then the hard work's done. The hard work starts then, really, because you're having to continually market your scheme to retain interest for the person who couldn't attend the original webinar, who couldn't attend the original ride and drive event. Maybe they joined 2 weeks after that or a month after that. So how are you going to retain their interest on an ongoing basis? Because if you don't do that, then you will see the orders dribble away over time, because you will lose that impact and you won't be front and center of the employee's mind when they're in the market for a new car. And it could be 6 months, 9 months, 12 months down the line. So some simple guides on how the scheme works. I would expect maybe some kind of client implementation plan to take your customer through that journey as well. As I mentioned earlier, a good scheme is going to have to be able to answer that, what happens if somebody leaves. Now, how you answer that is up to you, but you will need something, whether it is early termination protection, as I said, scheme reallocation, however you want to answer that question, could be any combination of those things, but I would expect some kind of answer on that. A salary sacrifice scheme, any car on the road, of course, needs to be insured with motor insurance, traditional motor insurance. So a salary sacrifice scheme typically includes a motor insurance proposition. So what does a good scheme look like? I would expect it to come with a motor insurance proposition. There's two ways to go about that. One is to align yourself with an insurance specialist in the salary sacrifice space and bolt that product into your salary sacrifice offer. Lots of providers around to do that. The alternative is not necessarily as tax efficient and not as well taken up, is that the customer can use their own fleet insurance. I wouldn't necessarily recommend that all the time, but it's a possibility. So one thing the scheme needs to do is it needs to cover insurance in some way, motor insurance. You'll need processes around how you're going to manage driver incurred charges as well. So whether that's fines, parking fines, speeding fines, bus lane offences, all of those things, and also some of the traditional things. Again, covered in a load of detail in the course, but how's excess mileage going to work on a salary sacrifice car? How's vehicle damage going to work on a salary sacrifice scheme? So lots of things there, and I'd follow that up again with probably a huge bank of EV knowledge, because if the people offering the scheme aren't familiar with how to get the best out of an electric vehicle, your scheme won't be as attractive. So I would say there's a few things just to cover off what I think a good salary sacrifice scheme looks like. Again, more detail in the course, but I thought I'd just touch on a few things there for you. Can we go to the next slide, please? So, putting the doom monger's hat on, if you like, what could go wrong with a salary sacrifice scheme? It's not all champagne and roses, otherwise everybody would be doing it. So I would say the first thing is, not on this slide, but I would say the first thing that could go wrong with a salary sacrifice scheme is if you're not doing it right. I'll give you a couple of examples of that. If you are offering salary sacrifice to employees and the sacrifice in their salary takes them below national minimum wage, we're going to have HMRC jumping all over you. So I would say take time to make sure that process is robust. Also, if you're calculating your tax calculations, your gross and net, and you're calculating that wrong, that of course is going to lead to trouble with your salary sacrifice scheme. And I would be mindful of the differences in tax between England and Scotland, again covered in more detail in the course, but you're going to need to have something that recognizes different tax rates in different countries in the UK. And on the ones on the slide here, it's very tax related. What could go wrong here? Well, there is a piece of legislation, tax legislation, called optional remuneration arrangement, which has an exemption to it for any car with 75 grams of CO2 or less. And that tax legislation makes salary sacrifice inefficient for any car above 75 grams of CO2. Again, no time to go into it in detail today, but again, the course covers it. But what could go wrong with a salary sacrifice scheme, or what could affect a salary sacrifice scheme, is a change to that exemption. Now, the BVRLA are in touch with the policymakers on this to keep everybody abreast of it. But if that 75 gram exemption reduces to 50 or reduces to 0, for instance, is going to impact the cars that are available on the scheme. No suggestion that it might, but as I said, BVRLA are closely in touch with HMRC and HMT, His Majesty's Treasury, on that to stay close to it for their members. You might want to keep your eye on changes in VAT. I hear people talking or campaigning to have electric vehicles made exempt from VAT. Again, I'm not going to make any statements around that, but leasing is a very VAT efficient product. And if VAT is taken away from that, that could impact the popularity of a scheme on salary sacrifice. I'd keep an eye on the staff turnover of your customers. If a global event happens, or a national event like a recession happens, and lots of people are being made redundant or things like this, then you are going to increase the amount of early terminations in your scheme. Therefore, you might want to keep an eye on that. The levels of benefit in kind are interesting. They're clearly driving a lot of attraction here, and they're set fair. The level of 2% of list price is fixed until April 2025, and thereafter it goes up by 1% per year until 2028. So we have a clear line of sight, really, of attractive benefit in kind right the way through to April 2028. Who knows beyond that? And I'm sure we'll find out in due course from various budgets and autumn statements. But I'd keep an eye on the levels of benefit in kind to make sure that the scheme can remain attractive for those reasons. And I suppose the final one here is a couple of things relating to electric vehicles themselves. If, God forbid, we go back to the lack of supply we had a couple of years ago, whether that's through semi-chip conductors, whether it's a Ukraine crisis, whatever it may be, it could be that the supply issue scuppers your scheme. If you're talking to a driver and they're saying, I'd like a mini electric, please, and you come back to them and say, yeah, fine, absolutely, it's a 12-month waiting time or an 18-month waiting time, the salary sacrifice audience may well say, thanks very much, but I'll go and find something in a dealer. So supply of electric vehicles, which is getting a lot better now, but if that turns around again, that would be a red flag for a salary sacrifice scheme. And the other thing that, of course, would be a red flag for an electric car scheme is if the price of an electric vehicle goes north and carries on being much more expensive. The signs are that the opposite will be happening. But again, that's prediction and conjecture. But I would keep an eye on if there becomes lack of supply for electric vehicles, and if there becomes exponential increases in the purchase price of an electric vehicle, then you may well want to keep your eye on that one as well. So there's a few things that could change here. Just wanted to give you a bit of a snapshot of those. And I think we've been having a few questions coming in as well. And I think we've also got some answers to the poll. Mark, are you there for me?
I am, yes, I am. So we've had a bit of a split here in terms of the scheme in place. So the poll is saying that we have 40% have a scheme in place, and that means 60% by my maths don't. So I don't know if that's a surprise to you, John, or not.
No, not really. I mean, it's one of those things that some people have it, some people are interested in it. Obviously, the interest in this webinar has suggested there's a lot of interest in it. It doesn't mean to say that everybody is operating a scheme, and by no means is every employer in the land doing this. So no, that doesn't take me by surprise at all. It's encouraging that 40% are on board already. So hopefully everything we've described here is aligning with your experiences so far, and for those 60%, hopefully we've given you a few little snapshots to try and whet your appetite a little further.
So we have, John, had a barrel load of questions in, so you'll be pleased, to hear that. So I'm going to start off with question number 1 for you. Yeah. Can you do salary sacrifice on a monthly subscription?
I would suggest you take very detailed tax advice on this, because HMRC have a position on salary sacrifice, and it's around the change in terms and conditions of employment. HMRC would expect any change in terms and conditions of employment to be, in their words, significant. So my understanding would be that would not apply, and significant means 12 months or more, effectively. You can't change somebody. You can't change somebody's salary 1 month and then change it again the following month and change it again the following month. So that would make it incredibly hard to do it on monthly subscription. But I would suggest you take very, very detailed tax advice on this. My off the cuff answer would be, I think it would be difficult, and I think you would go against HMRC guidance if you were looking at it. But I'm no tax expert, and I would suggest to somebody they take tax guidance.
Great stuff. Great stuff. We've had another question in from Adrian Freeman. If an employee leaves, can they take the car with them? Is it portable?
Depends how you structure your scheme. In many cases, no. It's a company car. And you would effectively hand the car back. If you wanted to take it with you, it wouldn't be on a finance arrangement. And again, I'll come on to how that could potentially work. But in the vast majority of cases, the scheme is not regulated by the Financial Conduct Authority because there is no personal lease. If you wanted to port the agreement over to a private lease, then we would be looking at some kind of Financial Conduct Authority regulation here with credit and affordability checking in place. So the vast majority of schemes don't allow the employee to take it forward on a lease. Where I think Adrian is coming from is there are a couple in the market who structure it differently and do allow that to come forward, but they come with their own constraints, come with their own structure. So technically, yes. In the vast majority of cases, no.
Great stuff. Thank you, John.
I hope that answers your question, Adrian.
Hopefully we'll get a thumbs up in the chat for that one. Right. Okay. So the next question is from Anindya Banja Chowdhury. And they have said, as an employee, if I take a vehicle in a salary sacrifice scheme, who is the owner of the vehicle?
The leasing company. It's a company car. Ownership will never transfer to the company or to the individual. It is the leasing company's asset.
Good stuff. Okay, I've got another question for you from Susan Duffy. Can the employer claim 50% VAT on the car? And is that taken into account on the gross salary deduction?
Right. Okay. So in some cases, slightly contentious subject. And I know the BVRLA are looking into this with HMRC and their members. So probably not for me to. If you take it in its basest form, then this is a company car. So the rules around VAT reclamation are the same, in that you can reclaim 50% of the VAT on the finance element of the rental, and you can reclaim 100% of the VAT on the maintenance element of the rental. Anything outside of that, I would suggest you should be taking detailed tax advice. And as I said, BVRLA looking into this with HMRC and their members. So there isn't a categoric answer on that, but in most cases, it would be treated the same as a company car. But as I said, BVRLA looking into that with HMRC.
Great stuff. Thanks, John. Next question. What percentage of conversion rates can you expect from a salary sacrifice scheme?
In my experience, you are typically looking at about 10% of roughly, it could be 5, could be 15, could be 20, but around about 10% of the eligible audience. And why is it not 100%? Well, not everybody needs a car. Maybe you've got a car already. Not everybody drives. Not everybody likes electric cars, which are predominantly the focus on these. So typically, you would see around about 10%. So if you've got 200 employees, you might expect 20 orders. I've seen some with a conversion rate of 0.5%. I've seen some with a conversion rate of 30 or 40%. It depends on the audience. The more financial onus you put on the individual employee, typically, in my experience, the lower the take up. So if you want to maximize take up and therefore maximize the employee benefit and therefore maximize any employer NIC savings, then I would probably try and take away some of the financial burden on leaving for an employee. But to answer your question, broadly speaking, work on about 10%.
Great stuff, John. Okay, so we've got time for a few more questions, so I'm going to pack them in. Tim Johnson has asked, what is the typical take up on a new salary sacrifice scheme in year one?
Well, I go back to the previous answer of typically 10%. In year one, I would expect a slightly higher. So there's normally a bit of a burst of interest and a burst of excitement. So you might expect 15, possibly even 20% in year one, if you have put a really good scheme together, really attractive, really well priced, really good protection offer around early termination. So you could expect 15 to 20 in year one, but I think it would go down from there.
Great stuff. Cheers, John. Next question. Christian Howard has asked, can salary sacrifice be applied to used vehicles?
Yes.
Short and sharp. I like that one. Okay.
And I'm starting to see a few more players offering used vehicles. And when we say you, it could be nearly new typically. No, I've seen a couple of providers out there offering used ones now. Again, probably take some detailed tax advice on the VAT position of the used car. But yeah, in theory, yes, absolutely.
Look, an interesting question from Brad Ferguson. Do you think there is much longevity left in SalesSac, or is it on its last legs?
Can I borrow your crystal ball, please, Mark? I'm not in the business of making speculations around what might or might not happen, and I'm sure the BVRLA isn't either. So I guess we just have to look at what we've got in front of us, which is a clear line of sight on benefiting kind attractive rates until 2028. So I see no reason why it wouldn't continue with its popularity there. If we also throw into the mix the zero emission vehicle mandate, which is applying significant focus on delivering more zero emission cars and battery electric cars, then no, I don't think it's on its last legs. Will it last forever? I'm not in a position to predict that, and neither is the BVRLA. So I don't think it's on its last legs. I think there is a window here. How long that window lasts it's above all of our pay grades, Mark.
No, that's well answered there. A couple more questions I think we can squeeze in. Megan Knight has asked, is there a minimum amount of employees an employer needs to have in the business before they can take up a SalesSac scheme?
It depends on the scheme provider. I know there are some scheme providers who will offer this for one car, and there are some scheme providers that won't be interested unless there's an eligible audience of 1,000, for instance, because they know that 10% is going to give them 100 and they're not interested in anything less than that. So it really does depend on the scheme provider. But if you're looking for a provider that will offer it for your 3 employees or your 5 employees, then there are plenty out there who will be very interested in talking with you on that. So to answer that question, no, there isn't a minimum amount, but it will limit your options for scheme providers.
Great stuff. And then I think the last question we can squeeze in, we've got Tim Baton has asked, does it affect your pension?
Right. So very political answer on this one. I'm not a qualified pensions advisor, so therefore I am not qualified to give an answer on that. And if you're not a qualified pensions advisor either, then I would suggest you shouldn't be answering that question for your customers either. The subject should be raised, of course. There are many different types of pensions, and how will you ever know what makeup the pension of your employee will take if you're not part of the pension department or qualified pensions advisor? So I think the subject should be raised in a scheme FAQ document, exactly as it has been today. But I think the answer to that question is that the individual considering a salary sacrifice scheme should take their own independent qualified pensions advice from their pensions department or from their pensions provider. Unfortunately, I'm not qualified to give that advice.
No, great stuff. Thank you. Well, look, thank you, John. That's great. So we haven't been able to answer all of your questions today, on today's webinar, but as promised, we will absolutely follow up with every single one that has been asked today post-session. So back to yourself, John. Can you please cover off the course outline before we reveal the special learning and development gift for attending today?
Sure. If you can bring up the next slide, and there it is. So as we've mentioned a few times, we've touched on a few points today in 40 minutes or 35 minutes. The course that we're talking about here is actually 6 hours worth of detail. So it covers so much more than we've touched on today, and it covers the things we've touched on today in so much more detail, like how it works, like the critical points of it, like benefit in kind, income tax, national insurance, this thing called optional remuneration. It's worth understanding more about that. Detailed examples of how the savings work in various tax positions, whether that's a 20% taxpayer, a 40% taxpayer, a more expensive car, a plug-in hybrid. We go into more detail about the target market as well. So the first half of it is effectively giving you the theory, so that you can then, after that, you can confidently explain salary sacrifice to a customer, provided they can't ask you any questions. And I sort of, in the course, I suggest that people, you can, by the end of this, provided your customer's got gaffer tape over their mouth, you will confidently explain salary sacrifice. The second half after lunch on the course is really taking the gaffer tape off the customer's mouth and allowing them to ask the questions, as the audience have done today. And many of the questions that are in the right-hand side have been raised today, like what's the future of salary sacrifice? Will it affect my pension? What about something like leavers? And also touching on things like parental leave. That's often misunderstood because that person hasn't left. So how's the approach to that? We cover that in more detail. So the more detail around the employee engagement. So there's the kind of scheme that's put together. I think from understanding, I think you can see on the ticker bar down there, the next 3 courses, I think there's one in March on the 12th, one in May on the 7th, and one in July on the 10th. But if the BVRLA have more demand for these courses, we'll book more in. It's quite easy. So if anybody wants to have different dates, just let us know. And I suppose the other thing to bear in mind here is the additional courses that run kind of slightly alongside this, the EV related courses that I help the BVRLA run. And one of those goes into real detail around what your customer expects you to know about electric vehicles. They will have lots of questions and they will expect you to have the answers. So that course really goes into detail about helping. What about tips and techniques to maximize range? How to effectively charge a vehicle? Can you take it abroad? What happens if you break down? Tips and techniques on maintenance, those kind of things, much more operational. And then there is another course around the mindset of selling electric vehicles, because that's very different too. So there's a couple of related courses to this, but there's the detail on the screen for the salary sacrifice course. Hope that covers that for you, Mark.
No, that's great. Thank you very much, John. So if we go to, I think the slides come off now, do they? And we're going to talk about yes, we are. We're going to talk about the special gift. Okay, so for attending today, you should see at the bottom of the screen running across 2 discount codes. The first discount code says QW15. So this will give you access to a 15% discount code on your next open course run by John. So that could be one of his EV car courses he was talking about, or of course his salary sacrifice. So that would be on the course booking. So to be really clear here, if you wanted to book 1 person, or if you wanted to book 5, you'll receive that 15% discount on your next course booking. And the next salary sacrifice course, as we know, is on the 12th of March. But also as well, you'll notice there's another code on there, QWD25. So this is for Driven by You courses, and this will give you a 25% discount. So a Driven by You course is a course that John would run for you directly at your business, at your premises, or online for your staff only to attend. We normally say it would be around a minimum of 6 delegates to attend that course. And if you would like the content tailored to support your business, we could do that. And if you include this code, you would receive the 25% discount, and that would be on John's courses again. So the EV car courses that he runs, or the salary sacrifice course. And we'll follow that up also with an email post course as well. Over to you, Tess, I think, just to wrap up.
Yeah, perfect. So thanks everyone. Yeah, just make a note of those discount codes. So those will work on all inquiries and bookings up until the end of March. So yeah, thank you everyone for today. It's been great to have your questions through. Tomorrow you'll receive a recording of the webinar, so then you can reference the content alongside a reminder of those discount codes for all of Jon's courses in our portfolio. You'll also receive a feedback form as well, so please take a little bit of time doing that. And we're looking forward to sharing more quick win webinars with you soon. Thank you so much, everybody.